Hello, hello. Good afternoon. Good afternoon. Hi, Naz. Good afternoon, girl. How are you? Let me get IG on here today. How are you doing today? So, hi, guys. Elaine Proby here, CEO, PROBY'S Tax and Accounting on this Thursday afternoon. I don't know if the sun is coming out or not, but it's look a little overcast today, a little bleaky here in LA, but still a beautiful day, guys. Still a beautiful day. So I want to welcome you guys on here today. Hit like and share on this video. We'll talk about some personal investment strategies, how to build wealth. I mean, the whole key here is, everybody works really hard. Of course, this is what we do. We get up every day and work really hard, and we trying to, make money. And of course, we want to be able to get to a place where we have that money start working for us, right? I mean, the whole key is to work, invest, make money, and have that money working for you later on, so you can plan for your retirement and hopefully not have such a stressful, part once you put in all this work, right? So you want it to pay off in the end. Hi, Laverne. Thanks for jumping in. Hi, sis. All right. So today we're going to talk about how to build wealth or how to rebuild wealth. Some of us may have had a decent cash flow initially, especially prior to COVID or even in the past. So you want to be rebuilding. And for those who haven't already, so we want to show you, talked about how you can build wealth, guys, how you can keep more of the money that you're making. And a lot of this stuff is not always how much money you make, but it's how much money you keep, right? You'll hear that saying all the time. You can make a lot of money and spend it all. It doesn't really matter. So it's not how much money you make, it's how much money you keep. You can make a little bit of money and you can keep a whole lot of it, right? If you know certain things to do. So I want to have talk about 3 different tips that you guys can use and follow about building wealth and keeping wealth. One of them, the first one is to take control of your debt. My number 1 point today, we'll talk about taking control of your debt. We'll talk about some investment strategies, just some simple stuff that we can do on a day-to-day. You don't have to day-to-day. You don't have to be some major investor. And then understanding your taxes, which is one of the biggest savings. This is a place where we spend a lot of money on that may be unnecessary. So guys, make notes. This is very important for everybody. So hit like and share, get all your friends on board. Hey, Andy, thanks for jumping on. Yes. All right. So blessings. Thank you. All right, good afternoon. So here we go, guys. The first point today, taking control of your debt. Again, this is a big thing for all of us because especially during the pandemic, it states that a lot of Americans, a lot of folks, not even Americans, but just all over the world have incurred a lot more debt during the pandemic, right? A lot of folks resort to going back to, say, credit card, because money was tight. So a lot of people went back to using credit card money, which is sometimes very expensive money. Some of those interest rate on credit card is up to 29%. Some is even 33%. So a lot of folks went back to using very expensive money from credit cards and certain things like that. So we want to be able to take control of that debt. Now that you can sit and focus a little bit more, you want to look at what the debt is and try to narrow it down. Determine what is your highest interest rate credit card. And some points that you can do is there's ways to either try to pay down that debt, pay down the highest interest rate first. Okay, you have money to pay, you pay the highest interest rate first. I know we had a session on this. You pay more on the highest interest rate and you can pay less on the ones with the lower interest rate, so you can pay down the balances on the highest interest rate. So that's the strategy you want to use. So you want to control that debt by paying off the highest interest rate and pay your lower interest rate, less money there until you pay that one off, and then you go on and pay the rest of them off. There's also a thing that you can do, which is transferring your balances. Now, this is really great, and I talked about this in the other live, where you could take those balances from the high interest rate credit cards, guys, and you can roll them over to, they have these started interest rate, which is 0%. So a lot of lenders was offering that. You could take your balances, your high balance from a high interest rate. You want to roll it over to another credit card that you may have with 0% interest rate. And sometimes the 0% lasts 6 months, sometimes up to a year. So you can have your balances over there paid down as fast as you can, of course, but it wouldn't be incurring any interest because it's 0%. So this is a great strategy to use. So the whole idea here is controlling your debt and trying to pay down your debt as much as possible and avoid paying exceptional interest rate on your balances, especially on your credit card. Another thing that you can look at also too for those people who own property, right? Real estate interest rate, yeah, home interest rate is low. So take a look at the interest rate that you're paying now and make sure that you're at the lowest that you can get. If you're at a 4%, you might can even go down to a 3% or it's even under 3. Can you imagine reducing your monthly mortgage payment by hundreds of dollars? How much money you can set aside towards your wealth building? Just imagine saving $300-400 a month on your mortgage payment simply because you have adjusted your interest rate. Interest rate have a lot to do with how much you pay on a monthly basis. So that is super, guys. If you have a mortgage, take a look at the rate that you have now, and you might want to, you don't have to pull any money out. You don't, and definitely you're trying to reduce your monthly mortgage payment. It is very important. There's a lot of savings. I have a lot of clients who have done just that. I have clients right now who is doing exactly what we're talking about right now. They're reducing their payment by getting a lower interest rate. Okay, so that's super. So you want to take a look at that, guys. The other thing is we also had this discussion, pay your bills on time, right? Because we talked about paying late fees, right? We talk about paying late fees, sometimes late fees on just small payments because we forget them. You want to pay your bills on time. See, the idea here is take control of your debt, paying it on time because we're trying to save money. We want to have as much money out of what we make, we want to keep, okay? So this is why we're talking about paying your debt on time, because if you pay it late, there's a late fee. That's some extra money that you don't need to pay out. $59, you pay $59, $39, $34, maybe on $100 late payment. So definitely don't want to do that. That's all throwing money away, guys. We work too hard to be throwing the money away, okay? So that is the number one point. Take control of your debt. And by doing so, making sure that you know what they are, try to pay them down as fast as you can. Strategically, there's a way to do this so that it works for you and save you a whole lot of money. And that's why we're talking about this today, okay? All right, so series 4, thanks for jumping on here. Thank you guys for being over here on IG. Great, great, great. Appreciate it. Let's move on to the second point today, guys. We're talking about how to build wealth or rebuild wealth. And this is, when we talk about wealth, we talk about definitely having a cash flow, more money in our pocket, hold on to more money, and everything that we do, this is what we want to do so we can invest and have that money grow for us so that when we retire, of course, there is enough money there to live comfortably, right? This is a whole plan, the whole idea of all this work that you're doing every single day right now, okay? So you want to work less later on and have more money. So investment strategy is number 2, investment strategies. Now, we all hear about investment. Like I said, you don't have to be a major investor, just some simple things that you can do. I know a lot of folks are they are in the stock market. A lot of folks is buying stocks. You don't have to invest major money initially. You need to go in there if you're doing this yourself, because we don't have enough money to hire you a broker and all this good stuff. You know, a lot of stuff that you can do yourself, but you just, want to take your time and make sure you understand how this works. You really can make money, or it sometimes is a long-term investment. However, the strategy and the key to investing in stock, guys, pay attention to this, is sometimes it's knowing when to get in the market, knowing when to sell, and knowing when to get out. But the other key is knowing when to get back in, right? So what that means is the whole idea about making money in the stock market. And we can have an expert come later on the show and really talk to you guys about how this works. But the smartest thing about it is you want to know when to get in. So you want to buy low. Then you want to when to get out. So if you want to sell high so you can make money, right? And then you also want to know when to get back in. Now, during the pandemic, a lot of people pulled out money out the stock market, and some of them have pulled it out too soon. And I'm sure you guys have heard. So there was a lot of ways that people made a lot of money in the stock market because they knew when to get out, and they also knew when to go back in. So it's not a bad thing to invest in. However, you just need to know what you're doing, and there's just a strategy that you have to adhere to for you to be able to make money in the stock market. And I bring that up because so many people now is into the stock market because they have so many simplified ways and so many simplified apps that you can do it yourself, and you don't have to really hire a stockbroker to do this for you, okay? So that's one of the points in investment strategy. The other one, which I'm always talking about, which is great, guys, the retirement plan. And the reason we're talking about this is because this can increase your cash flow at the end, put money in your pocket. So when you retire, this money is there. So retirement, guys, you want to make sure that there is a retirement plan that you're invested in somewhere, whether it's a 401k at work. The greatest part about that is you may put some money in, your employer puts some money in, you have taxes that you don't have to pay on that money that is being paid to you. It's deferred. It's so many ways to save. This is one of the key things we're talking about. You can have a traditional IRA. You can have a Roth IRA. You guys hear about all the stuff again. Retirement fund. And we'll have an expert at this retirement fund investment come on and explain that further to you guys. And once again, right, every time we're talking about this, and I want to emphasize, it doesn't mean that you have to have a lot of money, thousands of dollars. If you just make a contribution, there's maximum contribution, let's say $6,000 to an IRA, but if you can contribute $1,000, right, it saves you on taxes. You set that money aside till later on. It helps with your cash flow, and it helps you to accumulate money at the end. So again, don't think that all this stuff has to do with I need a lot of money. And I want to emphasize that because most people is turned off. They figure if they can't save $1 or $10, they won't save $1. That's not how it works. Okay, so this strategy works for everyone, no matter how much money you have available. And what we're talking about is for you to have more money available at the end to spend more money in your pocket so you can invest more, right? So that's why we're talking about this. So the strategy of investment is setting aside money in a retirement fund. If you have an HSA, which is a health savings account, excellent tax savings one. You want to set money aside on that. And then another very common way to invest money, the strategy is to invest in rental real estate or a real estate period. Okay, so to invest in real estate is another thing there. You guys have to determine where you would want to buy, rental income, how that pays out according to your mortgage payment. So all of this stuff, there's a simple strategy that you need to follow. However, once you accomplish that, once you know what that is, there is so much money that you can save. Rental real estate, investment in any real estate is long-term sometimes. Sometimes you can do it really fast. And it's passive income, guys. Great investment for retirement. Have passive income. Can you imagine just having a positive cash flow, rental cash flow coming into you as you retire later on? You have these real estate, this property with positive cash flow coming from rental income. Passive income, excellent way to retire, right? So these are ways for you to invest, and so that you can continue to build wealth or rebuild wealth. If you had it before, lost it, or if you had never had it before, right? So that's number 2 investment strategies, right? So let's move on. I don't want to make it too complicated, too complex. These are just some of the simpler points that everyone can follow very easily. Third point today, guys, number 3. Okay, let's see. Cherie says something over here. What? Okay. You want to invest in real estate? Okay, she said somebody invested in real estate. Okay, so we can hold. Oh yeah, so you can build wealth. Yes, of course, that's one of the greatest ways, guys. One of the greatest ways is investing in real estate. Most of our billionaires, believe me, they have a huge portfolio of real estate. That's what most of their investment is in, right? So Margie, thanks for jumping on here. All right. I don't know, sometimes the glare in the window here, it makes it a little bit hard for me to read this stuff. Okay, so okay. I can barely see what Margie had. I don't know why the glare is just not that good today, guys. It's not on my side. Okay, Elaine's advice. Okay, you're back. Look, thank you guys. And I know you guys have some great points on here. For some reason, it's just a little glary today. Margie and Sharice, awesome points I'm sure that you guys are making on here today. Third point. This is major, very, very major. I love this one. Make sure that you guys hit like and share on this part. Understanding your taxes. This is point number 3. Okay, so understanding your taxes. And look, the reason why we have to always end up here again, like I said, just being a tax expert and knowing and watching how many people pay more taxes than they need to, simply because some things that they don't plan for or do in advance. And this is another reason why we're here discussing this stuff today. Understanding your taxes, guys. let's face it. So most people don't understand their taxes. Most people still don't understand sometimes, certain taxes are deducted if you're an employee. Certain taxes, they don't know why they're paying it in. And of course, a lot of people don't do a lot of stuff in order for them to save on taxes. So understanding your taxes, let's talk about some basic points in understanding your taxes. First of all, you want to know what is taxable income. Now, it sounds very simple, but a lot of people still don't understand what taxable income is. Some people don't understand if unemployment is taxable income, if disability pay is taxable income, if Social Security taxable income, right? So, if you get a settlement for certain things, or if it's a personal injury settlement, is that taxable income? So a lot of people don't understand taxable income. So under some basic points, just understanding what taxable income is will help you to plan ahead. Because if you get income and you realize it's taxable, what you can do is have a conversation, see how much taxes are going to be on that money. You can set it aside, save penalty when you get ready to file, guys. So all of this really help you to save money and keep more money in your pocket. So if you don't know if it's taxable, and I love it because I always get calls from clients if they're having some type of settlement going on, or they're inherited monies, whatever, or they have some investment that's yielding some type of cash, they're getting a payout, or should they put money on, whatever the money is, you want to know whether it's taxable. And I love when I get this question because I love the planning ahead. And then, of course, once you understand that, you can plan ahead and you can save a lot of taxes, put more money in your pocket. You don't want to get money and pay it back all out in taxes, right? So understanding taxable income. Second point, understanding what's deductible expenses, guys. It doesn't matter if you are in business, not in business, you're just itemizing, on your Schedule A, what is a deductible expenses? Like if you are itemizing on a Schedule A, if you are an employee and you're filing your taxes, whether you should, give a donation, which is a deduction, certain things that are deductible that will allow you to save. So understanding what's your deductions. If you're in business, understanding what it is that you can write off. If you know this, you can keep good records. You can make these deductions, guys, and you can pay a lot less taxes and save. Very, very important. So you have to understand what your deductions are. And, I'm telling you, so many people miss deductions and they pay more in taxes than they have to. The whole point here is keep more money in your pocket and pay less in taxes, right? So those are some of the basic stuff. The other thing on that is keeping good records. If it's a business related expenses, guys, all you got to do is keep records. And nowadays, you don't have to just keep a physical receipt because you're paying with credit cards. You're paying from your bank card. There's ways that you can track all this stuff. So keep good records so you know what it is that you spend so you don't miss any deduction. All of it might mean something. Sometimes I love those clients who are, if they're not sure, they just like, okay, well, here's everything I did. Let me know which one I need to keep. So what we do here at PROBY'S, we generally let them know what they should be keeping, what's relatable to their circumstances. And then next time around, they get it right. And everything is all laid out perfect, right? So there's no problem. Just find out if you don't know. And that's why we're doing this today. So keep good records for anything that's deductions that you take. And of course, you guys, if it's a business related deduction, just say what the business, what the discussion was about and all that stuff. So again, what you were doing at that moment in time. Okay. So those are 3 points. I don't want to make this any more complicated. So I'm going to recap what the 3-point is today, guys. Once again, thank you guys for coming in here today and listen to this stuff. So make sure that everybody gets this information. How to build wealth, how to rebuild wealth is what we're discussing today. My Bruce said, leave your questions and comments. Okay, I'll come back through here and answer all these questions and comments. Okay, which is what I do. So let's recap. 3 points today. How to build wealth. Again, you don't have to be making a lot of money. It's how much money you keep. So number 1, take control of your debt. We all have them. List them out, see what they are. Credit card debt, try to pay off the highest interest rate first. Try to transfer balances to a 0% interest rate. Take a look at all that stuff. Take a look at your mortgage. Take a look at your interest rate. Take a look at any expenses, anything that you're paying out that you can save money on. You want to take a look at that so you can control your debt. Save money is what we're looking for. Number 2, investment strategies. Number 2, investment strategies. What you need to do is there's investment that you can make simply in the stock market. Those who are interested in that or is already in there, you want to pay attention to when you put money in, when you take money out. People who are interested in investing in real estate, guys, and more than ever, retirement savings, health savings account and retirement fund, because a lot of that stuff is tax deferred. You understand that? Later on, when your taxable income is lower, you're in a lower tax bracket, you pull all that money out and you save. So that's the second point. Third point today, guys, is understanding your taxes. Understanding your taxes, 3 things. What is taxable income? What is deductible expenses? And just keeping track of your records. We are not getting too involved in this, but those are just 3 simple things that you guys can do. Save you a lot of taxes by knowing these things. Plan ahead so you can be more prepared and you can make your estimated taxes if you need to do that. All right. And keep good records. I like that one, right? Keep good records. If you are ever asked about any deduction, you can pull your records out and you won't have to worry about anything. So that is my 3 points today, guys. Again, if you have any further questions in any of this stuff, give us a call here at PROBY'S Tax and Accounting, 323-290-9034, and or visit our website at probydstax.com. We're here to assist you so you can get through this. You can continue to build wealth. Again, this is what, we're working very hard, so we want to have something in the end, right? And so this is why we're here having these discussions. Hi, Eddie Trapp. I'm not sure if I'm able to read what you're writing here because I'm having a little trouble with the lighting, but I'm not sure if you call the office or set up an appointment so we could talk about your filing. You are doing okay, awesome. Oh, I'm doing an awesome job. Thank you. Really appreciate that. All right, guys, I appreciate all of you guys jumping on here. Again, great information for free. And we're sharing this because, again, we've been in business for over 35 years and helped a lot of people, individual and business, save money. And we want to make sure that this continue to happen, again, because we care and your success is our business. All right. So with that said, guys, I'm up out of here. I'll come back through here and I'll respond to all those beautiful comments. I really thank you guys. Awesome information. Everybody's able to use this stuff. Everybody over here at IG. I want to thank you guys for jumping on here. So with that said, I want you guys to have a wonderful rest of your Thursday. Leave your question and comments below. I love my team. They always reminded me, you can't forget anything on this here because they're going to get you for it. I love it. Hit like and share on this video. See that? Hit like and share on this video. We need all the shares so that everybody can get this information. I just love it. Thank you, team. All right. With that said, guys, you guys have a wonderful and blessed Thursday, and I have a fabulous weekend. I will see you guys next Tuesday. So I want you guys to take care of each other and take care of yourself. Bye-bye.